In Europe, stocks declined in early trade after Iran fired rockets on Iraqi air bases housing U.S. troops. Well, let's have Chelsea speak more about this. Hello, Chelsea. Good afternoon. Well, markets around the world have fallen after Iran launched an attack on U.S. forces in Iraq. Are investors in European taking the threat of more conflicts between the U.S. and Iran seriously?
I think it's really quite surprisingly the opposite of that. So the initial market reaction was pretty dramatic when this news broke overnight of the attacks. We saw oil spike about 5%. We saw U.S. futures decline about 2%. And markets opened a little bit down here in Europe, but they've actually basically bounced back. And the DAX is up about 0.2%, as you can see behind me. And most exchanges in Europe are up now as well. So I think investors are really focusing in on a couple statements that have come from Iran and the U.S. One of these was a tweet from President Trump where he said, all is well, everything is looking good so far. So I think they're sort of taking that as a sign that Trump doesn't want to escalate this further. And a tweet from the Iranian foreign minister also indicated that they don't want to escalate this any further. So investors are really hoping that this will be the end of attacks and retaliation on both sides, and that really they'll be able to sort of solve this conflict with diplomatic means going forward, and markets can sort of get back to focusing on fundamentals that had left exchanges really near record highs in recent days.
Now, in other news, Germany's factory sector remains stuck in decline, with data out today showing a fall in new industrial orders in November. How significant was the drop?
It was a fairly large drop. The decline was 1.3% in November from the prior month, and that's been really unexpected because the factory orders were actually expected to grow in November, and there's been a lot of optimism over the German factory sector and the German economy more broadly. That the factory sector has really been stuck in this long decline. Driven in part because of the trade tensions between China and the U.S., because of Brexit. But there had been some hope that had sort of bottomed out, and there had been several reports that had sort of indicated more optimism from businesses. This data today really goes against all of that and shows that the sector really still is struggling with all of those factors, and it doesn't look like that's really turning around anytime soon.
Corporate news, German car maker BMW said it expects to sell a record number of cars in 2020. Can BMW escape the global auto industry decline that's hurting competitors already?
I think this is also a bit of a surprise. BMW also announced that they had seen sales rise about 1% in 2019, and so they expect to see even more sales in 2020. So this is sort of a very difficult environment for most car makers at this point. Automakers have been struggling with a slowdown in China in particular because of the trade tensions and the weakening economy there. That's been a really important market, especially for these luxury German automakers like BMW. But they're also investing a lot of money into electric vehicles right now, so they're feeling a lot of profit pressure. For BMW, they've been benefiting because they are sort of selling a lot of high-margin SUVs right now. So that's where a lot of the growth that they've had has been coming from. So I think there's still a lot of questions of whether they'll be able to, sort of keep that going in the new year. But they have seen sort of stronger sales in China, and they do seem to be keeping the SUV sales pretty high right now. So there's definitely a lot of optimism within BMW that they'll be able to hit another record in 2020.
All right, thank you, Chelsea. Let's continue to follow up on those developments. Enjoy the rest of the day.